look from the report, you see that there has been tightening by the Central Bank of Nigeria. There has been a mop-up of excess liquidity. So there isn't much, there's very little money in the system. Real estate, of course, thrives on money, both for development and also for acquisition and sales. So the market has not been buoyant. On the other hand, the bigger picture, the bigger trend, one of the bigger trends is the turnaround in the stock market. What happens with the turnaround in the stock market is that it takes off some of the pressure, not all of the pressure, but some of the pressure of corporates who have been underwater, of individuals who have also been underwater. It just generally improves the liquidity situation. So there is an expectation that the market is beginning to turn around, and we are beginning to see the green leaves or the shoots of that happening.
But how much of an impact did this tightening measures by the CBN really have on the real estate markets? I mean, we're seeing private equity investors also showing interest in our real estate markets, even despite the fact that, you know, local banks aren't lending as much.
Yes.
So how much of an impact has it had? We're seeing weakening prices because of what's happening. But how bad is it?
What I'd say is, it's a two-tier market. There are the international institutions, international private equity institutions, international finance houses, international players who can who can draw in international money. There are the local players who it's a lot more difficult to draw in money. So the two-tier market is such that those that are coming in from outside, private equity houses such as Actis, African Capital Alliance, institutions such as the IFC, other international players, of which there are many, are coming in and saying to themselves, this is a great market to come into. There's no liquidity in the local system. Cash is king. Let's look around and buy whatever we see as good value at excellent prices and just expect the turnaround. The opposite is for the local players who don't have such access to international money. Some of them are forced sellers. These are both on the corporate side and on the individual side. There is a lot of oversupply of, for example, land on the market. There's a lot of land that people are wishing to sell because they have to find money somehow, and there just are not enough buyers. So on the one hand, it's a difficult market, but on the other hand, now is a good time to buy.
But I mean, going forward, I mean, looking at our local players, some news coming out, major changes. We were hearing the CBN is revising operational guidelines for those mortgage banks. Yes. I mean, guidelines are going from 100 million naira to 2.5 for the state provisional mortgage banks and 5 billion naira for the national mortgage banks. Now, as a result, we may see a lot of M&As in that sector, and of course, sort of boosting in the mortgage industry in Nigeria. Yes. I mean, what's your take on the impact it's going to have?
What you do find whenever the institutions have to raise their capital base, it's a challenging time, because how do you raise your capital base? You either tap the equity markets, you either tap your shareholders, or you sell assets. It's a difficult time to sell assets. Your equity base doesn't have the money. So again, as you say, you are looking at M&A mergers between the mortgage houses. A merger between 2 or 3 mortgage houses doesn't necessarily solve the problem for the provision of mortgages. I think the mortgage market, it's more structural issues. There are deeper structural issues. Our interest rates are very high, where you're looking at lending rates of region of 20%. What rate are you going to lend on for a mortgage? And what is to stop the person, if the rate is low, to stop the person from taking that money and going and fixing it and getting a return without putting the money and buying the house? So there are a lot more structural changes than just an M&A to fix the mortgage problem.
But I mean, what are the alternatives then? I mean, we've talked about, you said lending rates are way too high, so accessing financing from banks is not the option currently. We have private equity investors, injecting billions of naira. But what are some of the other alternatives for those who are looking for money to invest in real estate?
We're talking here about, it's either on the institutional side or on the personal residential owner-occupier side. For the institutional side, there are, I think with the opportunity in the market, I mean, one of the other things I had mentioned in my report is that Nigeria, obviously a lot of people already know this, is considered a very attractive frontier market, especially when you look at the international scenario where returns are very hard to come by, where interest rates are very low, historically very low. So now there's a lot of interest in the local market. So there are a lot of international players that are looking to come into the market. Where there are very good developments, again, on the institutional level, it becomes not easy, but to an extent easier to put your development in front of some of these sources of funds. Even a number of the local banks have international partners, so they can access dollar funding at single digit rates. So it becomes easier for the good developments that rise to the top of the market to gain single-digit funding. So that eases the pressure to an extent.
Yes. Where are we seeing growth going forward?
We're definitely seeing growth on the retail side. Again, in an earlier report of mine, I'd mentioned that the sellers of goods, the sellers of goods are looking for, the international sellers of goods are looking for markets to come into. They see Nigeria as an emerging market, 160 million people. They look for the type of retail space that they're used to in the West, and there has been very little of that. That's one of the drivers. Again, our population, the disposable income is rising. So it's sort of from top down and bottom up. They are looking for better places to go and shop, places to take their children to go and watch films, to go and eat. We see Kentucky coming in, go and eat Kentucky or these types of fast food that we're all used to when we travel outside the country.